Hey everyone, I'm Alex, and this is Wall Street Radar. We have to talk about Figma right now. You heard that right. Figma just dropped a killer Q3 earnings report. ARR is now over $1 billion. Profits crushed estimates, but the stock, it's crashing to an all-time low right before the lockup expiry. Is this a massive Wall Street mispricing, or is there a hidden trap? Today, I'm using the NTM ARR valuation method to reveal Figma's true fair value, and I'll tell you exactly where to step in and buy this SaaS giant. All right, let's look at the numbers that should be sending this stock flying. Figma absolutely crushed all expectations in Q3. Revenue, $274.2 million, up 38% year over year, comfortably beating consensus estimates of $263.9 million. The real shocker, Non-GAAP EPS came in at 10 cents profit. Analysts were expecting a loss of $1.58. This is a massive win, proving the core business is highly profitable. Their ARR, annual recurring revenue, officially crossed the $1 billion mark. And the stickiness? Net dollar retention, NDR, is a whopping 131%. This proves customers are staying and spending more. Now for the risk. Even with the stellar beat, Figma's You're Aware revenue growth has slowed for the third consecutive quarter, dropping from 46% down to 38%. At this valuation, the market hates to see decelerating growth. But the bigger, more immediate risk, tomorrow, November 7th, is the IPO lockup expiration. This unleashes a massive flood of insider shares onto the market, and the fear of this technical sell-off is the real reason the stock is being slammed. To figure out if today's $44 valuation is a bargain, we must use the standard Wall Street weapon for SaaS companies, NTM ARR. Why use it? We don't use PE because Figma is a growth stock. NTM ARR standardizes the enterprise value against the forecasted high-quality subscription revenue for the next year. It's the most accurate measure of potential. A top-tier company like Figma, with 35% growth and 131% NDR, should command a premium multiple of 12x to 15x its NTM ARR. Based on this standard, Figma's true fair value range should be between $55 and $75 a share. This suggests the current price of $44 is likely in the irrational underpriced zone. But what about the competition? Figma has decisively won the UI/UX tool war by forcing Adobe to put Adobe XD into maintenance mode. Adobe's strategy now is a tactical retreat to focus on their core strength, AI, Firefly, and the rest of the ecosystem. As long as designers need Photoshop and Illustrator, Adobe stays relevant. Figma won the tool battle, but Adobe is focused on the ecosystem war. Final verdict. Fundamentally, Figma is undervalued, but is now the time to buy? No. It is a period of extremely high technical risk. The technical strategy. We must watch two levels. The critical support is $43.30 to $44. If the stock breaks this during the lockup chaos, more panic selling will ensue. The short-term resistance is $50. My final action plan? Cautious watch and wait. Let the lockup expiry play out. Look for the stock to either A, stabilize above $45 after the dust settles, or B, get hammered down to $40 or lower by panic sellers. That would be an incredible entry point. I'm Alex, this is Wall Street Radar. Do you think Figma can hit my $55 target, or will the lockup sell-off ruin the party? Tell me in the comments. Don't forget to subscribe. I'll see you next time.